Hello, everyone. Thank you for joining us this Saturday morning, and welcome to this specialist trading educational presentation. Now, today I want to talk to you about how to buy the dips and sell the bounces. And in this particular presentation, even though we're going to show you both sides, I think with the current market conditions, we are probably going to be focusing more on how to sell the bounces. Because if you followed me at all, you know that we're all about trading in sync with the trend. And now, obviously, the trend is down. So with any bounce we get, there are actually opportunities for selling. So there's going to be a lot of opportunities right now, especially since the way the market really bounced yesterday, going up roughly about 2,000 points. There are some opportunities for selling, but you have to know exactly when and how to do it. Because just because something's up right now doesn't mean it qualifies as a selling opportunity. You have to have all the requirements and all of the rules met. For example, let's look at this buying example right here. Most people would look at this older chart of the spiders and say, well, not much information until this happens. Now this is where people say, well, we're in a downtrend. And Steve's always talking about downtrends. You never want to be out of sync with the market, so I guess I'll be a seller. Look at all the downward closings we have here. So I think I'll sell here or look for a shorting opportunity. Here's a little bounce. Steve says to sell on the bounces, so maybe you'll sell right there. But in all actuality, even if you think there's a downtrend, there are downtrends, short-term downtrends within overall uptrends. Conversely, there are short-term uptrends within overall downtrends. But with this particular example, where most people would think we're in a downtrend, you're going to sell on this little bounce right here. This strategy number one, which I'm going to be sharing with you, the entry rules, actually generated a buy signal right here at the very bottom of that supposed downtrend. And then look what happened. You had a very nice profit along the way. So this can work inversely with selling. I'm going to share with you the entry rules to this particular strategy. And you're going to see how simple it is to apply on our platform. All of the examples I'm sharing with you today have all been generated using the PTS Primo charting platform. I developed this with Pro Trader Strategies to make trading simple. So welcome once again. My name is Stephen Primo, President and Founder of Specialist Trading. Our only goal as educators is simply to educate you, simply to provide you with sound fundamental education that has stood the test of time. Even though the market has gone through some tremendous moves as of late, there have been a lot of opportunities to really trade in sync with the market using our techniques and using our strategies and methods. The reason why most traders fail really is because you're out of sync with the market. I cannot tell you how many emails and how many calls I've gotten this last week from friends and family saying, what do you think we should do now? What do you think the market's going to do? I said, well, if you used our techniques and our simple methods, you would have known weeks ago that we were in a downtrend, that you shouldn't be buying or shouldn't be in the market at all. So the reason why a lot of traders have been failing is that they're holding on against the trend, or they're trying to go against the trend by implementing some buy orders. So if we're in a downtrend, you should be using this technique or this strategy I'm going to be sharing with you to look to sell these bounces. Now, before we begin, as always, we're first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this specific entry rules to strategy number one, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that today's presentation is strictly for educational purposes only. Now, as you're taking a brief moment to view the disclaimer, once again, we have a lot of new people in today. So if you haven't done so already, please feel free to follow us on Twitter. I post a lot of great free information, a lot of signals our strategies have generated to little bits of financial wisdom, things that will help you along the way in these turbulent markets. So please feel free to follow us on Twitter and get a lot more education there as well. Now remember, before we begin today, I just want to really focus on the point that we are different from other websites and other webinars you may have attended, and that our only focus is on educating you. I know a lot of people go to webinars thinking, well, this guy's going to tell me what I should short on Monday or what I should buy. Should I go long? Is the sell-off over, or do we short it? Or what's the best stock to buy? What's the best undervalued stock or future or currency pair? We don't believe in that. And in my opinion, that's why most traders fail. Because listen to yourself. When you're saying, what do you think I should do? That is a recipe for a disaster. You should never ask that question. You should never ask anybody what they think is a good buy or what you think I should buy or sell tomorrow. Because when you're doing that, You're basically telling the markets, I don't have any idea what to do. I'm not educated enough. I'm not experienced enough. So you tell me what to do. And can you think of any endeavor, any business where someone does that? You go to a restaurant or some company and the CEO was saying, how do you think we should run this company? What do you think I should do? But traders do this on a daily basis. Think of all the chat rooms you go to. Think of all the TV you watch and all the so-called gurus telling you what to buy or what to sell or what the market's going to do. I mean, it's just silly. You should never put your faith in anyone or anything else. So someone would say, well, then what do you put your faith in, Steve? I mean, what are you doing? Aren't you telling us what to buy or sell? No, we never generate buy or sell signals telling you what to buy or sell. We're simply educating you. It's your choice whether you want to take the trade. And on top of that, there are multiple, if not hundreds of different ways to trade our methods, and everyone should trade them differently. So we're not here to tell you how to trade. We're not here to tell you what to buy or sell on Monday morning. We're not here to tell you what the perfect market is, a perfect time frame. We're here to educate you so that you can make those decisions. As you see here, a good mentor teaches you how to trade, but does not trade for you. You should never waste your time and most especially your hard-earned money having someone trade for you. Those are the things and the decisions you should make. Now, the good news is that's our only job here at Specialist Trading and Pro Trader Strategies. We provide you with all this information so that you can make a qualified decision on your own. In my opinion, I've been trading for 43 years and I've known lots of traders. Lots of traders have come and gone. Some of the best traders I've known have lost it all. The only ones that have sustained themselves, have been able to trade 20, 30, 40 years down the road, are the ones that make their own trading decisions. None of these traders go to chat rooms or blogs. None of these traders look at fundamental news or look at earnings reports or listen to the guys on TV. They make their own decisions. And that's what it takes to be a consistent trader. So this is what my goal is, to hopefully provide you with the education so that ultimately you can get there. That's what we call the specialist edge. That's the same edge that has sustained me now for 43 years, and that's what I want to do, sustain you for at least that amount of time, okay? Now, since this is an educational class, ask me as many questions as you want, but please wait till the end of class. I have a lot of slides to share with you and a great offer at the very end of today's presentation, so I don't want to take all of your Saturday morning. So if you have questions, please wait till the end of class. I promise I'll get to each and every one of them. And don't worry if you come in late or if you can't see or hear everything clearly. We will provide each and every one of you with a link to this presentation's recording, okay? So you can watch this at your own leisure over the weekend as well. Okay, so once again, we have a really good crowd here today. Please wait till the end of the presentation to ask any questions. All right, with that stated, let's begin today's class. And we're going to be talking about strategy number one. This is one of our most consistent pullback methods. And this is a great strategy. We have this strategy being traded by students all over the country and all around the world. And unfortunately, I can't give you all the rules, but guess what? I'm going to share the preliminary entry rules with you today on the conservative version of this method. So even if you have some experience trading, you'll be able to apply this and you'll be able to figure out exactly where the other rules should be. Okay, so let's talk about some of the highlights. As I stated, it's a pullback strategy. Now, for those of you who aren't familiar with what a pullback is, that's a method that is designed to buy low in uptrends. And it's also designed to sell high in downtrends. Now, how do we determine if we're in an uptrend or in a downtrend? Well, we do this by using a unique Downtrend channel application. Now, many of you are unfamiliar with what a Downtrend channel is. Don't worry, I'll share with you what it is in just a few seconds. The beauty of strategy number one, you can apply it to any market, any time frame, and any direction. So it doesn't matter if you've come here today and you only trade currency pairs, or if you've come here today and you're an intraday trader that likes to trade tick charts. It makes no difference, okay? Now, as with all of our methods, I know your eyes are going to light up and you're going to say, gosh, this is great. I'm going to start trading this Monday morning. Please, paper trade this first. I can almost guarantee with 100% certainty that if you start trading this too soon, you will lose money. Not because it doesn't work and not because it's not a consistent method, but because you're implementing the rules incorrectly. And the reason why is because you jump in too soon. With all of our methods and with all of our techniques that I always share in our webinars, our free webinars, I usually give away a few rules just to show you how powerful these techniques are. And almost like clockwork, on Monday morning, I get emails saying, this stuff doesn't work. I lost a lot of money. and then I ask them to show me their work, and when I get the emails back with the examples, they're always implementing the rules incorrectly because you jump in too quickly. So please, paper trade this first until you fully understand what I'm going to be teaching you today. Now, our edge here is consistency. Consistency does not in any way mean that everything works 100% of the time. Trust me, I have losing trades all the time, okay? I'm still trading here 43 years later. I lost my first opening trade. I was talking to the people at Pro Trader Strategies a few days ago. My first couple of trades were losers. But by the end of the day, I was able to make that back. That's what consistency means. A two-step forward, one-step back approach. So consistency means that you have a method that's able to recoup those losses, usually sooner than later. That's what we're looking for. We're not looking for some method that promises never to lose or has a 99.9% win-loss ratio. I mean, trust me, I've traded those things before that had those type of statistics, and they always blew up. What happened to all the statistics? Well, they work great on paper, but once you apply them in the real world, they all blow up. So what we're talking about is consistency. What we're talking about is an awareness that there will be losses, but having the faith and the courage to continue trading because you know that you have very high level of confidence that it will be able to have a winning trade here or there. Okay, that's what we're trying to instill in all of you. All right, so here are the indicators for this particular method. We're going to only be sharing with you the conservative version. This is a 21 period Downtrend channel. All right, that's all we're going to be using for this particular style today. Now, someone would say, well, I've never used the Downtrend channels. I don't know what they are, or my platform doesn't have them. I'm sure if you do a Google search, I think I've seen in the past, there are some free websites that actually offer some free stock chart sites that offer the Downtrend channels. All you want to do is edit it to read a 21 period. That means it looks back 21 periods to come up with the calculations. Whether it's a 5-minute chart, it looks back 21 5-minute bars. Whether it's a monthly chart, it looks back 21 months, but it comes up with its calculations. Now, here are the rules. I'm going to go over these quickly because I've learned over my years of teaching that most traders learn better with visual examples. So I'll kind of just go over these, but you'll get a better understanding of what this means once we look at the visual examples, the chart examples. So you want all three channels headed in the same upward direction. Now, once you see that, look to buy when a declining price bar's range is entirely below the rising middle Downtrend channel. This is our setup bar. Buy one tick above the high of the setup bar. Remember to always paper trade. Now, I know this probably thoroughly confuses most of you who have never heard these rules. Don't worry. I'm just basically showing this slide for your records because you're all going to get a recording of this, so you can just keep this for your records. But let's look and see what it really looks like. All right, now here's a generic chart. I specifically made this generic, taking out what it was. It could be a currency pair, it could be a monthly chart of IBM, it could be a tick chart of the Emini Futures. Absolutely makes no difference. It could be Bitcoin for all we care. It makes no difference because it works on any market or any time frame. So I don't want you to think that if I showed this to be Apple, that you think, well, this only works on stocks. It makes absolutely no difference. So in looking at this, in hindsight, we can see that we've been in an uptrend. But during this uptrend, where was the most opportune and ideal place to buy? Obviously, it was right here, right? Right off this little sell-off. So how could we have done this in hindsight? Sure, it looks like, oh yeah, well, I want to buy here, but how could we have done this in real time? Well, we apply the Downtrend channels. This is the way the Downtrend channels look. There are 1, 2, 3 channels, and they all have this kind of stair-step approach, but notice that they're not in sync. As you see here, the bottom Downtrend is going sideways, while the middle is going up sideways, and the top is going straight up. So they do not have to be in sync. They all need to be, though, headed in the same direction. In this case, upward direction. So if you see that one is going sideways, it doesn't mean that it's not headed in the same upward direction. Just go back and look and see where the last setting was. If the last setting was lower, and it's been moving steadily up, kind of like a stair step up, it's still headed in an upper direction. All right, so we've made that distinction now. They're all not in sync, but they're headed in the same upward direction. Now, as that happens, we usually see price rising, and price will oftentimes touch and maybe even hug the top Downtrend channel. Okay? As you can see, we're headed higher. Now, at some point, price will start to decline. All right, where most people think this is the change of trend, as long as the Downtrends are still headed in the upward direction, this is just our pullback. So as price starts to decline, it will touch the middle rising line, it'll intersect it, and what we're looking for is a price bar that is completely below the rising middle line. This is your setup bar, okay? This is the bar where all the rules have come into play, all the requirements have been met, and now we have a rule for entry. Now, we're not going to just buy at the market using this particular conservative style. What we want to do is buy one tick above. Now, obviously, if we're trading currency pairs, it'll be 1 pip above. Now, this does not mean it closes there. It just means it has to trade there intra-bar. So you can either put a buy stop, or if you're in front of your computer, you can just wait and watch for it, put a little bell on your, or a little alert on your platform, and the minute it touches there, you just buy at the market. It's up to you. Now we see here that this has to happen on the very next bar. So let's see, did it trade there on the very next bar? Well, no, it didn't. So what do you say? Do you say, well, I guess this is not a good signal, I'll look for another one? No, because as long as the Downtrends are still headed in their upward progression, well, now we can lower this down to this bar, and now this bar becomes our setup bar. So you see how this way of entering, you'll be able, if we continue to go lower and all the rules are in play, well, you'll track it down lower and you'll get a lower entry price. Now on the very next bar, what happened? We traded there. Remember, we do not need to close there. You could trade there and then close lower. That's okay. But in this case, we traded there and we closed a little higher. So this is our entry point. And then look what happened. Now remember, I know a lot of you are saying, wow, this is great. But Steve, where do I exit? Where do I place my stop? What about the money management? Remember, those things are all included in our course. All right, this is just one way to trade this. We have multiple ways in which to trade. This is a more conservative version. We have an aggressive version. Lots of different ways. I'm just sharing with you the entry for this particular stop, okay? Now, if we're selling, we're going to do the exact same thing, but we're just going to turn everything upside down. So these are the sell rules. I'm not going to go over them because, once again, they're a little wordy. You can keep these for your records on the recording. Copy them down, or make a slide out of them, or make a what's it called, some type of post-it of them for you, and just put it on your screen. But let's look at some more pictures once again. This is the easiest way for you to remember this. Once again, looking at this generic chart, we can see in hindsight we've been in a downtrend, right? So looking in hindsight, it's like, sure, I would have wanted to sell this, but where would have been the most ideal place to sell? Well, obviously, it would have been right up here. But in hindsight, it's easy to say, how could we have known that in real time? Well, it's easy if you apply the Downtrend channels. Here are the 21-period Downtrend channels. And once again, what direction? We want them all to be headed in the same downward direction. They're not all going to be in sync. You see the bottom one is going sideways, while the middle one is having a stair-step downward approach, and so is this. As long as the previous setting was higher, that's okay. It means they're all headed in the same direction. They're just going at different intervals, but that's all right. All right, so as price is headed in the same, or I should say, as the Downtrends are headed in the same downward direction, we see that many times now the opposite. Price will hug that lower Downtrend channel, okay? But then, as often does, price will start to rebound and bounce. This is the pullback. So as long as the Downtrends are headed lower, any rise we get is not a change in trend. As most people think, it's simply a pullback. So as price starts to rise, it's rising towards the downward trending middle line. It intersects it, and now we have a price bar that is entirely above. You see how this is not even touching? The bottom range is not touching. This is our setup bar. Now remember, once you identify that setup bar, this does not mean you sell at the market. What we want to do is sell one tick or 1 pip below, and this has to be on the very next bar, or else the trade is negated and we look for the next setup bar. All right. Now we do not have to close there, just as the previous example. All we need to do is trade there intra-bar, and as you can see on the very next bar, we did trade there. We didn't close there, we traded there. So that's our sell, our entry, and look what happened. off to the races, to the downside. Now, think of the market. Now, let's just say that this was the index. It is not the S&P index, but let's imagine it is. Imagine you apply this indicator to the current chart, or maybe an hourly chart of the Emini, or maybe an hourly chart of a specific stock. Don't you think now that we're starting to get a little bounce? So this could possibly help you, not to say that a signal has been generated, I'm not telling you that, but this technique could help you in the current downtrend of the market. So let's look at an educational example to see how this works in real time. All right, here was that original chart. This is an older chart of the spiders where everyone thought, well, we're in a downtrend, right? But if you apply the Downtrend channels, what direction are they headed? Obviously, they're headed higher. So where everyone else was thinking this is a sell-off, this is actually an opportunity to buy. So as price declines, it touches, intersects the rising middle line. And what do we have here? We have a complete bar that is not even touching. Do you see how the top of the wick doesn't even touch? That's the bar we're looking for. This is our setup bar in the downtrend. So once we have found that bar, that's our setup. Are we going to buy at the market? No, not using this style. We're going to wait for it to trade one tick above. It doesn't have to close there, it just has to trade there. Once it trades one tick above, that's our buy reference. And as you can see, it went up after that, 8 points. Now, I know a lot of you say, well, 8 points is not a lot, but I believe that represented close to 600, maybe 700 points in the Dow Jones. So you could have used this as a market directional tool. You could have said, well, I'm not going to actually buy the spiders, a little bit too expensive for me, and I don't like to trade options. But you know what? I was interested in buying this $20 stock that goes really well with the market. So if this generated a buy signal and it triggered, well, then I'll buy that stock. You see, you can use it a number of different ways. Now, let's look at stocks. Let's look at some recent stock examples, both upwards and downwards, all right? Here was an older chart in Facebook. This was in December coming into January. Look at all the Downtrends were headed higher. We sold off and touched. Now you see here how we sold off and touched, but then we started to rise. We did not go below the rising midline, but this one did. So that's our buy point, 28 points coming into mid-January. How about these two sell signals in ALK? All right, this was in February coming into the first week in March. All right. A lot of people say, well, gosh, Steve, this whole sell-off in the market caught me off guard. Well, that's funny because this is an airline stock. How did this notice sell twice at the beginning of February and in mid-February? Because the market tells you everything to know. This is why we say there's absolutely no reason you have to look at news. There's absolutely no reason you need to know the earnings or know what's going on with worldly conditions. It makes no difference because the market was already telling us to sell in ALK. As you can see, the Downtrends were headed lower in February, early February. We had the rise. There was our first sell signal. You could have gotten short right here. I believe the price right at that point was roughly around 66. And it went down a little bit. And let's say you had a really tight stop. Most likely you would have been stopped out for a small loss or at least broken even. But you got another second chance to go short here the second week of February, prior to the big sell-off in the market. You could have gotten short again, roughly about 65. In roughly 2 weeks, stock went down to 46. I think it went down even lower after that. All right, let's look at another chart here. Even though this captured 20, most likely it could have been more like 30 points. Now, remember, in our course, we teach you the different exits. You could have stayed in this as long as you wanted, or maybe taken a quick 2 points and gotten out. Is there a right way to exit, a right way to enter, a right way to place your stop? Yes, there is. It's the one that makes you feel the most comfortable. Now, the good news is we have multiple ways for entering, multiple ways for exiting, and multiple different techniques for placing your stop. We teach you that in our course. Ultimately, you decide which one makes you feel the most comfortable. All right, let's look at NSC, all right? Here we have, once again, in December, the lines are going up, the Downtrend channels. Now, you can't see the chart doesn't go back enough, but this is coming from a higher point. 3 entries, up 33 points ultimately. How about NTRS? All Downtrends headed lower. You can't see this one lower. As you can see, we have our setup right here. You could have gone short roughly about 101. It's 21 points coming into the first week in March, okay? MVDA, same process. We have 3 Downtrends headed higher. We sell off. Here's our first instance below. Here's our second. You could have had two choices to get in. If this one didn't work for you, if you had a small minor loss, well, you could have gotten in again the first week of February for a potential 75-point gain in just a couple of weeks. How about CVX, all right? This was, I believe, in mid-February, prior to the big sell-off in the markets. Two chances to go short here, roughly at about 110, all right? Was there any talk about what was going on worldly with the health scare? Was there any talk at this point? Not really. No one had really made a big deal about it. So then why did this generate signals to go short? Because the market, this particular stock, was telling you it wanted to go lower. We don't need to listen. If you want to listen to news, if you want to listen to earnings, if you want to listen to some guy in the chat room, feel free to do that. But I'm just trying to make it as easy as possible. There's actually no reason to do that. I stopped looking at that stuff some 4 decades ago. And if I'm still here trading, then isn't that kind of living proof that you don't really need it? So why overcomplicate your trading when the market, the chart you're trading in front of you, tells you just about everything you need to know? How about TDG, all right? All Downtrends are headed in the same upward direction. It's hugging the top price, and then look what happened. Where most people would say, wow, okay, I've got to get out. Look at this. Some bad news came out, some bad earnings, maybe a bad announcement, something's going on. Look at this gap down. I've got to get out. That's a bad signal. Well, where everyone else thought this was a bad signal, those were actually 3 setup bars. Now, the first one we never traded above. The second one we didn't trade above. The third one we did. So you got into the stock roughly about 564. Now, I know it's an expensive stock. You could have purchased the calls or some type of spread strategy with a bias to the upside. But the stock went up 100 points, okay? Roughly 20% in the next couple of weeks coming into the end of January, early February. And then finally, Amgen, all right? This is headed lower. All the Downtrends are headed lower. We have a bounce right here, but it never made it. So it goes lower, it hugs the bottom, and now we have another bounce. Here's our setup bar because it's not touching. You see, this was intersecting, but this one's not touching. You could have gone short right below that at roughly 228, roughly. 36 points coming into the end of February. Potentially you could have captured. This is all done just by using these simple rules. Now let's look at a weekly chart. XLNX, okay? Nothing changes because we're looking at a weekly chart. The same rules apply. We just apply the Downtrends on a weekly time frame. They're all headed lower. We wait for the bounce. This is our first setup because this was completely above, but we never traded below in this week. So then we just simply raise it. Now you get a even better price right here. And coming into the end of February, 26 points to the downside, all right? This sell signal was generated in mid-January, prior to any negative news going on in the world, prior to anything else happening, prior to the market falling out of bed. So how did we know to go short this? The stock told us. The only thing we teach to listen to is the chart in front of you. All your answers are right there. Here's a monthly chart of Costco, okay? This is going back to 2017. Nothing changes because we changed the time period. The Downtrends are still headed higher. We're hugging the top Downtrend, and now we have our sell-off, all right? We intersect the middle line. We are completely below right here on this. It's hard to see because of the tightness of the chart, but we would have entered in August of 2017, almost 3 years ago, all right? And coming into January of this year, 155 points potentially you could have captured. You see how this can help you, whether you're an intraday trader, whether you're a swing trader, or whether you're an investor. Now, I know not everyone just trades stocks. A lot of you like to swing trade ETFs. Okay, let's look at GLD, gold. Before gold sold off, we had the same setup, a buy signal here in early February, 12 points to the upside. I know gold has gone much lower, but trust me, in our course, we teach you all the different ways you could have exited or at least protected yourself if you had a nice profit. This is on a daily chart. Let's look at a daily chart of the spiders, okay? Prior to the big sell-off, look at all the chances you had to go long. Potentially 30 points. And remember, as I said, a lot of our students who trade this like to apply it to ETFs, indices, and they don't actually trade the particular ETF or the indice. What they do is use it as a market directional tool. So even though we had some buy signals here, it doesn't necessarily mean you had to buy the spiders. You could have used it just as an indication to tell you what you think the market is doing or going to do. Now that roughly this first signal here in 2019 generated 2,000 points to the upside in the Dow. All right, let's look at forex, because we know we have a lot of currency pairs. We have a lot of students and members that are in Europe that like to trade currency pairs, or around the world. Well, nothing changes. Here is a 4-hour chart of the Australian dollar going back to January. All the Downtrends are headed lower. So this tells you we're in a downtrend. I don't care what anyone is telling you, how, economics are going to affect the Australian dollar. It makes no difference. If the Downtrends are headed lower, you want to be a seller. So all you do is follow the rules. You see that price is hugging the lower Downtrend, and now it starts to bounce. All right, this is how we sell the bounces. As we intersect, we look for bars that are not touching, that are completely above, and that's right here. So we sell right there. The first bar that trades below on a 4-hour basis, potentially you could have captured 185 pips to the downside coming into the last month. Okay. There's no reason to look at anything economically. It's all right here on these simple rules. How about a weekly chart of the British pound, New Zealand dollar? Same rules apply. The Downtrends are headed higher, coming from a higher, or I should say lower setting, now in a higher setting. So we wait for price to sell off. On this weekly chart, it touched here in December, but we're still looking for a bar completely below, and that's right here. This was in January, the first week in January. All right. You could have purchased the second week of January once it traded 1 pip above, 900 pips coming into the close to the end of February last month. All right, now Emini Futures. This is the market I mainly trade because of my time restrictions and teaching and giving webinars all the time. I really can't focus a lot on a longer term, so when I have a moment, I like to intraday trade the Emini Futures. All right, here's a 10-minute chart of the Emini Futures. This was March 2nd. Nothing changes because I'm looking at a 10-minute chart. All right, all the Downtrends are headed higher. I don't care what the economic news, I don't care if the market's getting killed. On this 10-minute time frame, the Downtrends are headed higher. That's all I'm concerned with. I don't care what the hourly time frame is doing. I don't care what the daily bars are doing. I'm just looking at the 10-minute. So if the rules qualify for a 10-minute, I would have gone long here, right here, and 90 points potentially I could have captured to the upside. I think I traded this. I don't think I made 90 points. I think maybe I took about 10, but it's up to you how you want to actually trade this. Now, here's a 1-hour chart of the E-mini starting February 25th when the market started to head lower. Do you think this could have helped you if you're an intraday trader on an hourly chart? Look at all the sell signals you had, all right? Potentially, you could have captured 250 points coming into the end of February. All right, that's roughly about, $12,000 per contract. All right, just trading one contract. Now, a lot of traders like to get out of stocks because they don't feel comfortable in a strong downward market. They like to get in commodities, something more tangible. Okay, does this change? Anything change because we change markets? Absolutely not. Here's a chart in crude oil going back, I believe this was last year, but look at the chart here. This is before crude oil started to fall out of bed. 14 points to the upside. Here's cocoa. Nothing changes because we're looking at cocoa. Here's the rally. Here's our first setup bar. We didn't trade below. Here's our second, and now we go short 165 points. So do you see how it really doesn't matter what you're trading? I mean, you can apply this to virtually anything. So let's recap, all right, before I tell you about a great offer we have for all of you attending today. Remember, this is a very consistent pullback strategy. I just shared with you how it can trade stocks, futures, forex, commodities, virtually any market. It must be used with a 21-period Downtrend channel, though. I know a lot of you are saying, hey, Steve, I've been searching for this while I've been watching, and I don't have the Downtrends. Plus, I can't find it. Well, is it okay if I use this on Bollinger Bands, or is it okay if I use this on Keltner channels? Well, I went through the first thing when I was introduced to this strategy years ago, and I tested it on a number of different indicators. And unfortunately, I would not suggest using it on any other indicator other than the Downtrends. Why? Because you're not going to get the same results. You won't be entering at the same place. It just doesn't work as well. It won't be giving you an adequate representation of the trend. So yes, this should be applied with Downtrend channels only. Now remember, I just showed you any market, any time frame, any direction. But please, learn this strategy first. Learn the entry rules I just shared with you. You've been trading for any time. It's easy to figure out where you might want to sell. You say, well, listen, if I entered at a stock trading at 20, I'm going to place my stop maybe 5 points below that where the pivot is. All right, I'm risking 5 points. Maybe I'll get out if I have a profit of 10 points. I'll have a 1 to 2 risk reward ratio. All right. I mean, it's simple as that. But please learn the rules first before you actually apply real funds to the market. Our edge is consistency. Consistency means there is an awareness that you will have losses from time to time. In fact, I showed you a couple of examples where the very first setup was a loss. But you also had, if you remember, the second trade, the very next setup was a winner that would have recouped that loss. That's what consistency means. I'm not going to sit here and tell you like you've gone to other webinars where they say, this stuff never fails. We have had a 99.9% winning ratio going back the last 10 years. I would never tell you that because we don't believe in statistics or numbers at specialist trading. And why? Because everyone is encouraged to trade according to their own means. That means everyone can enter at a different spot. Everyone can exit a different spot. You see, you can only have statistics if everyone trades the exact same way, entering the same spot, exiting the same spot, using the same amount of contracts or shares. Everyone places their stop. I mean, that to me, that's like trading like a robot. You're taking yourself out of the game. Once again, you're not a part of the process, and you're basically just following blindly along. I as a mentor would never teach anyone to trade that way. You have to make your own decision. So whether that means using a different entry or a different exit, that's great. We want you to make your own decision. That's why we don't have statistics, because we encourage everyone to trade differently. All we're doing is teaching you these and highlighting these high probability entry points. And then we also share with you how you can apply that as well. So ask yourself, before you ask me questions, ask yourself and ask yourself honestly, do you think this strategy can help your trading going forward into 2020? I think it's a resounding yes. So here's how we're going to really help you with this. We're going to give you a great discount on this Saturday. This is our special strategy number 1 course on a Saturday. This is our discount. We're going to offer you this strategy number 1 course along with all the entries, 7 different entries, all the exits, 6 or 7 different exits, and all the stops, 7 different stop placements. You're going to get all the complete rules plus the different versions, the aggressive version along with the conservative version. You're going to get our Downtrends channel settings. You can apply to any market, and this all comes with educational correspondence. Now, strategy number 1 usually costs close to $700. We're going to discount that tremendously. I'll share with you exactly what that discount is in just a few minutes. But we're not going to stop there. We're going to give you another strategy. I didn't talk about this today. I may be talking about this one next week. This is built on entirely different rules. It's an entirely different concept. It's strategy 3A. Now, this is a continuation method. What's different than a pullback method? Well, a continuation method does not look to buy at lower prices the way a pullback does. A continuation method looks for a stock, a future, a currency pair to take off, and then it says, you know what, I don't want to miss this. And so this strategy has a unique way of finding out if there's more room to the upside or to the downside. Now, the one thing I want to share with you here, it says Emini Strategy 3A, because when we originally introduced this, it was for E-mini traders. But we found out that this can be applied to any market, any time frame, any direction. Our students told us that they apply it to stocks, currency pairs, futures, makes no difference. It works just as well. So don't get confused by the title right there. Now, remember, it does this by using entirely different rules, entirely different format. Let me share with you what it does here. As you can see, where strategy number 1 looked to buy lower, strategy 3A will look and says, well, there's a unique Bollinger Band setup here that is telling me that this is going higher and there's some more room left to the upside. So it'll generate a buy signal even when you think it's too high. And look what happened. Okay, does this to the downside as well, where most traders would say, hey, listen, this is falling out of bed. We're kind of too low to sell here. Maybe we're going to bounce. Strategy 3A can discern whether there's more room to the downside. So we're going to throw that in. That usually runs $6.95. We're going to discount that tremendously as well. But we're not going to stop there. We're throwing in extra bonuses. We're going to give you 7 of the basic bonuses to build your momentum in your strategy with your trading. We're going to offer you the add-ons. Let's say you have another platform. Let's say you have NinjaTrader, Sierra Charts, Metastock, TradeStation. we will provide you with the up and down arrows for all of these strategies 1 and 3A if you happen to have that. That's an $1,800, $1,900 value. We're also going to throw in bonus number 2, our Secrets of a Stock Specialist course. This is a 3-hour video seminar. I spoke in Colorado some years ago where I spoke for 3 hours and gave many more different edges and ways to trade. That's a close to $1,000 value. That's being thrown in as well. You're also going to get a PDF version of my book. Now, my book is fitting right now because a lot of it I talk about how I traded during the crash of 1987. That's a $99 value. That's thrown in as well. 6 months of our PTS Primo charting platform access. I'll talk about that in just a few seconds. We're also going to throw in our Secrets 2.0 course, bonus number 5. That's where we take our edges and our advanced trading to the next level. Bonus number 6, you're going to get scanners to identify the individual strategy setup. So you can get a scan for strategy 1 and strategy 3A. And bonus number 7, you'll get a multi-scanner. So you can scan for multiple strategies and techniques at the same time. This is all being thrown in, special bonus. But here's the great thing about this, in my opinion. Now, these are all being greatly discounted. The best thing is, in my opinion, the 6 months of our platform. Why? Because there are also different things included on that. We're going to teach you how to trade with our platform. That's why we devised it, to make trading simple and so that you could have a means to educate you and to check your work. Now, here are all the things included. Obviously, you're going to get strategy 1, you're going to get strategy 3A, and what that means is everything is one click away. You just have to click on the tab and it'll show you where the buy and sell signals are. But remember, we're going to teach you these things and what to look for. You're also going to get our enhanced buy and sell line. This is a way to predict the overall uptrend or downtrend. Over 90 of the most prominent technical indicators. Our auto-generated exit levels. This is a great tool. You won't find this anywhere else. It automatically tells you where to exit using one of our exit techniques. It comes on our platform and you see the different exit levels there. But here's what I think is probably one of the best things. The scanners, what I talked about earlier. It's so simple. You just click on the scan. In seconds, you'll see a series of green or red bars. And this is for any market you want, okay? Stocks, futures, currency pairs, Asian markets, commodities, the foreign markets, different time frames. And you'll see a green bar represents a buy signal. A red bar represents a sell signal. You can see this the night before going into any market, any time frame, and you'll be able to do this in roughly less than a couple of minutes. It's that simple. It takes all the hard work out of it for you. So this all is included along with personalized tech support. If for any reason there's a little issue with using the scanner, you don't know how to load a chart, we have a great tech support. We're always getting these great testimonials about how good our tech support is, and we'll be there in seconds to resolve the issue for you. So let's break this down, your Saturday morning discount. Strategy number 1. Now remember, don't get fooled by the graphics there, because we created these graphics a long time ago, and now our students around the world tell us that they can be applied to anything. So even though it says stock strategy 1, trust me, it can be applied to any market, any time frame. The same with strategy number 3A. 2 entirely different formatted strategies based on different rules. Along with that, you'll get 6 months of our platform, okay? Now with all those different 7 bonuses, all the different strategies, normally this would cost you, if you just purchase these separately, over $7,200, close to $7,300. And please, we're not going to even think of charging you that. We're going to discount this tremendously, but for a limited time only. We're going to discount this close to $7,000 in savings. We're going to only charge you for a limited time $297. Now, I can almost guarantee you that most of you, if you continue to remain long this past week, or were trying to buy and pick a low, you most likely lost more than $300 in this last week or two alone. How would you like to have all this information that's taken me more than 4 decades to accumulate for less than $300, okay? But remember, this is for a limited time only. 2 great strategies along with 6 months of our platform. I can't think of a better way to educate you and take your trading to the next level. Now remember, a year from today, these prices are not going to be the same. Most likely they'll be over $7,000 again, and this discount will have faded. So a year from today, you will have wished you became a member of these courses, things that I use in my current trading and things that have taken me over 4 decades to accumulate. So take your trading to the next level, invest in yourself, contact Pro Trader Strategies. I would suggest calling them directly at area code 310-598-6677. They can set you up. They can have you up and running with the platform as early as today. You can have your strategies already there, and you can start learning and studying the rules to both of these strategies, know all the entries, all the exits, and how you want to apply them, okay? Now, that link you see at the very bottom is the link that will take you to the information page as well as the sign-up page. You can do this all online if you'd like. I would go to our chat box because we've just posted a live link. That link you see in the bottom is not live, but in the chat box, all you have to do is click that on, and it will automatically take you there. If you have any questions about tech support or about strategy discounts, or say you're interested in another strategy, say you already have the platform, you want to know how you can apply this to your savings, contact Pro Trader Strategies. There's absolutely no obligation to purchase anything. They would be happy to work with you. They're very flexible. They can offer you a discount with another strategy, but you have to call them directly at 310-598-6677. We've broken up the format of the companies into two different sections. Anything concerning costs, discounts, tech support goes directly to Pro Trader Strategies. Anything concerning teaching or trading of the methods comes directly to me. So with that said, if you have any questions concerning the strategy I just shared with you today, the entry rules or trading, now's the time to ask. Open up your question and answer box, and I will answer it to the best of my ability, okay? Let's see, it says, Steve, some of the charts you're showing don't match the same indicators on Thinkorswim. Why so? Well, a lot of that has to do with the data, okay? Now, they may be using faulty data or different data where they have a continuous chart. So that, a lot of the times, is why. A lot of the times, the other platforms, it may not be regulated. But with that being said, that same format follows the currency pairs because, as you know, if you trade currency pairs, that data is not regulated either. And so what will happen is that someone will say, well, Steve, on my platform, I'm getting a sell signal in a particular currency pair or stock, and with someone else looking at the same information saying, I'm not getting the signal at all. What I tell them is, listen, we're not concerned with if they match up. That really makes no difference. All we're concerned is if a signal is generated. That's all that matters, okay? So if you're getting a signal on a platform that is not generated on another, basically, who cares? The point is, if it generated one, that's all that matters, and that's what you should be following. Follow the rules of the method as opposed to thinking that it's supposed to line up with another one, okay? Let's see. Any others here? Yeah, someone is asking, does this work on intraday currency pair? Yes, it does. We have a number of students that trade intraday currency pairs. And what they do is, I have students that use this on a 5-minute chart of currency pairs. Now, most currency pair traders like to use this on roughly a 4-hour chart. A lot of currency pair traders like to use 4-hour time frames, and that's fine. But just remember, you can use it intraday. You can use it, I would say, if you want to, daily or weekly. It makes no difference, okay? So intraday is fine, okay? Someone's saying, can we use this with the PET-D? Well, I don't really want to go into the PET-D right now. That's another totally different course. That's more of a trend identifier and signal confirmation tool. I can just say this, most pullbacks trading strategies don't work very well with the PET-D, only because if you're looking for them to confirm the signal, it doesn't work the way it would work with strategy 4. So I would say that, with a pullback method, PET-D is not something that is required, okay? Now, I just don't want to go into what the PET-D is because it's an entirely different structure and it works entirely different under other rules, okay? Let's see, Steve, with this, do I get the up and down arrows on the platform? Yes, the platform actually makes it much simpler. Now, I know a lot of you, as someone just mentioned, they had Thinkorswim. That's fine. If you have Thinkorswim, or if you have Metastock or MT4, that's fine. But it is a lot more cumbersome and a lot more difficult to apply. We made the platform with that really philosophy in mind, that we wanted to make it as simple as possible, because we know we have a lot of students that have never traded this style before and are learning for the first time how to trust themselves and follow different rules. Most of our students, when they come to us, they say, I've never heard of this stuff before. I always thought I was supposed to see what the earnings were, or I always thought I was supposed to follow the institutions. I mean, you don't require any of that stuff. So they're really not used to this. So we wanted to come in with a concept that everyone was basically starting over. So we made it as simple as possible. So since you're going to get 6 months of the platform, if you're saying how you're using another platform, I would really rely on using this information and, to get your ideas and to study and to get the setups and learn how to see the setups on your own, and then use the other platform basically to enter your orders. I do that myself. I have a platform where I enter my orders and that I use to trade with, but I also use our platform 75% of the time to look and see for setups and to get signals and stuff. So just toggle back and forth. But the platform that we devise and we develop for you with Pro Trader Strategies is an educational tool. It's there to educate you. It's not a trading platform. It's an educational platform that is there to help you learn and take your trading to the next level. And what we want to do with all of our students around the world is get you to that point where you no longer have to rely on us. Remember, that's not our goal. We don't want you to come to us and ask us what to do. Our goal is to basically give you enough information so that you can ultimately leave the nest and you can make your own decisions. You don't have to rely on us anymore, so that whatever platform, whatever chart you're looking at, you can look at it and say, you know what, that's a strategy number 1 buy signal, or that's a strategy number 3A sell signal. And you don't have to rely on anyone else to tell you what to do. You can do it on your own. That's our goal, to get you to that point so that you're self-sufficient. Okay? It's not our philosophy to have you come here every day to figure out what to do, to figure out what to buy or sell, to come to a chat room and see me trade. I mean, that's a recipe for disaster. We don't believe in that. We want you to be self-sufficient. Okay? Okay, good questions. With that said, I want you to go and watch this video as often as possible. But remember, don't sit on this deal. If you sit on this and watch the educational recording of this for the next 2 weeks, you may say to yourself, okay, I'm ready to take that 297 deal and call up Pro Trader Strategies. By that time, it may have already expired and we're on to something else. So don't sit on this too long. This is for a limited time only. 297. Remember, that's for 297. That's a tremendous price to get roughly 4 decades of education under your belt. And it's yours. It's yours for life. It doesn't expire. The only thing is just the 6 months of the platform. But after that, most likely you'll be able to work on your own and either continue to use the platform if you want to increase your subscription, or just say, you know what, I figured it out. I don't need it anymore. I can do this on my own. It's entirely up to you. All right? So as we close and take one last look at our disclaimer, I want to thank you all for taking time out of your Saturday. I want to wish you the best of luck in these difficult times. Stay strong. And remember, you want to take your trading to the next level. Take advantage of this good offer. I hope I taught you something today. I hope in this short presentation I was able to elevate your trading. Thank you so much for attending, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. Have a great weekend. I'll see you next time. Bye-bye.